Most people think investing only makes money when you sell an asset for a higher price. But dividend investing works differently. Instead of relying purely on price growth, certain investments can generate regular cash payments simply for holding them over time. That's why many investors describe dividend investing as feeling like printing money, especially when those payments start compounding year after year. Today we will talk about dividend investing feels like printing money, so before we get started, make sure to hit that like button, also subscribe to my channel. 10. Most people think investing only makes money when you sell. When most people think about the stock market, they imagine buying low and selling high. The entire focus is usually on price appreciation, hoping an investment grows enough in value to eventually cash out for profit. But dividend investing works differently. Instead of relying only on rising stock prices, dividend-paying companies distribute a portion of profits directly to shareholders on a regular basis. This changes the emotional experience of investing completely. Instead of waiting years hoping prices go up, investors begin receiving cash flow simply for owning quality assets. And once people experience investments generating money consistently without selling shares, it starts feeling less like speculation and more like building a financial machine. 9. Dividend investing changes how you think about ownership. Most people view stocks as numbers moving on a screen. Dividend investors often think differently. They see shares as ownership in real businesses that generate profits consistently over time. When companies earn money and share part of those profits with shareholders, investing becomes psychologically different. Instead of constantly worrying about daily price movement, investors begin focusing on cash flow generation. This creates a calmer investing mindset because the goal shifts from chasing hype to owning productive assets that continue paying over time. 8. Cash flow feels more real than paper gains. One reason dividend investing feels powerful emotionally is because cash payments feel tangible. Stock prices moving higher can feel abstract because profits only exist on paper unless shares are sold. Dividends are different. Money actually arrives in the investor's account regularly. This creates a psychological shift where investing begins feeling productive instead of speculative. The experience changes from, "I hope this stock goes up someday," to "this asset is already generating income for me while I continue holding it." That feeling is what attracts many people to dividend investing long-term. 7. Reinvested dividends quietly accelerate wealth building. One of the most powerful aspects of dividend investing is reinvestment. Instead of spending dividends immediately, investors can use them to buy more shares automatically. Those new shares then generate additional dividends themselves. Over time, this creates a compounding cycle where income begins producing even more income. At first, the growth feels slow, but over long periods, reinvestment can dramatically accelerate portfolio growth because the investor is constantly increasing ownership without adding entirely new money manually. This is why dividend compounding becomes extremely powerful over decades. 6. Dividend stocks often reward patience more than excitement. Many high-growth stocks attract attention because they move dramatically. Dividend investing usually feels slower and less exciting. Companies paying reliable dividends are often mature businesses with stable cash flow rather than explosive growth stories. But this stability is exactly what many long-term investors value. Dividend-paying companies often prioritize consistent earnings, disciplined management, and long-term sustainability. While dividend investing may not create overnight wealth frequently, it can create steady long-term financial momentum with lower emotional stress. 5. Dividend investors focus more on income than market noise. One major psychological advantage of dividends is that investors become less dependent on market prices emotionally. If a strong company continues paying and growing dividends consistently, short-term market drops may feel less threatening. Instead of obsessing over whether stock prices rise tomorrow, Dividend investors focus on whether their income stream remains healthy and growing over time. This changes how volatility feels. Temporary price declines become easier to tolerate when investments continue producing cash flow regardless of daily market emotions. 4. Dividend growth can quietly outpace inflation. Inflation slowly reduces purchasing power over time. One reason dividend investing attracts long-term investors is because strong companies often increase dividend payments gradually over the years. This means investor income can potentially grow alongside inflation, instead of remaining fixed like ordinary savings accounts. Over long periods, rising dividend income creates financial flexibility that static cash savings often cannot match. 3. Dividend investing rewards consistency more than prediction. Many investing strategies rely heavily on predicting market movements correctly. Dividend investing often rewards a different behavior entirely: consistency. Long-term investors regularly buy quality assets, reinvest dividends, and allow time to do most of the work. Instead of constantly trying to outsmart markets, they focus on building growing streams of ownership and cash flow slowly over time. This approach may feel less exciting socially, but historically, consistent compounding has created enormous wealth quietly. 2. The goal eventually becomes financial independence. One reason dividend investing feels so powerful is because the end goal changes. Investors stop thinking only about portfolio size and start thinking about income replacement. Eventually, enough dividend income can partially or fully cover living expenses without requiring active work. This creates a completely different relationship with money because financial survival becomes less dependent entirely on employment. The idea of assets producing reliable income continuously is one of the foundations behind long-term wealth and financial freedom. 1. The real reason dividend investing feels like printing money. Ownership starts paying you repeatedly. The deeper truth about dividend investing is that it transforms investing from a one-time profit strategy into a repeating income system. Instead of depending only on selling assets later, investors build ownership in businesses that continue distributing profits over time. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.